Rupee falls to new lows again at 86.4 rupees against dollar. What is leading to this? Vishwanath joins in with factors leading to this fall.
Right, Varsha. So you've seen the rupee crack quite a bit during the trade today. It's about 86.40 at the last count is what we understand. And that's coming out to be a all-time low, a record low for the rupee, down about 0.5% during the day and 3.64% since April the 1st. So what is exactly happening with the rupees? There are a few factors why the rupee is reacting the way it is. Firstly, the US macroeconomic data has come out to be stronger than expected. Jobless claims have come down. Unemployment levels have been falling sharply. And on top of that, the chances of a rate cut by the US Federal Reserve have been falling. The expectations are now that maybe at best you'll see probably one more hike in 2025, and that's about it. The dollar and US bonds both have been rising sharply, and because of this, you're seeing a lot of weakness across Asian currencies. What is also happening is that because there is a new government that is likely to take charge on the 20th of January, when Donald Trump takes oath as the president of the United States, there is likely weakness continuing till that point in time. Now, what does this mean for India? We need to look at what RBI is doing so far. In the last few weeks, the RBI has been staying away from excessive intervention in the currency market. And this is because the currency pressures that are facing the rupee at this point in time are not transitory. What is happening on the reserve side is also interesting. $634.58 billion on the forex reserves, which are down by about $12 billion this financial year. And these falling in reserves likely may open up the rupee for speculative attacks, because once speculators start seeing that the forex reserves are dropping, then the expectations of the RBI interventions go down. What can the RBI do if not intervene? Well, according to analysts at Nomura, you can go ahead and do some other measures such as reducing important imports such as gold imports. You can also repatriate some of the capital from state-owned companies. Apart from that, you can also talk about certain other capital measures that can help managing the inflow of currencies. You can mandate exporters to sell forex proceeds that they control. You can also introduce new measures to boost capital inflows. These are some of the measures that the RBI can implement. Other central banks across the Asian markets have implemented that, especially China has. So India looking at these kind of solutions might be possible. As of now, intervention seems to be not preferred as a medium for Sanjay Malhotra, the new RBI governor.
Well, thank you, Vishwanath, for that. Moving on, well, now I'm going to talk about three stocks in focus. Now, this is on the back of earnings, which came out on Friday, starting with PCBL. If you see, the numbers are actually not pretty good. Weak set of numbers year on year and quarter on quarter as well. Just the key highlights, if I were to talk about it, export volume growth slowed down due to excess inventory stocking by clients, particularly in Europe. And the domestic customers also deferred some purchases to fourth quarter of FY25 in anticipation of correction in prices. Also, if you see, the quarter-on-quarter numbers are pretty bad. Now, one of the reasons is the realizations, which was low quarter-on-quarter, which was led by 6% correction in crude oil prices during the quarter. Also, the Aqua Pharma business, which they acquired in November 2023, came under pressure owing to competition from China and, of course, tepid demand in US. And the PAT, so PAT plunged due to poor operating leverage and higher interest and depreciation expenses versus last year. And of course, the high cost acquisition debt will start getting repaid starting FY25 according to management, and the benefit of reduction in interest costs will start accruing from first quarter of FY26. So this is all for PCBL. Moving on, I have Just Dial. So if you see, the good thing about the company is the numbers is EBITDA margin. EBITDA margin, if you see, the expansion was led by both top line growth and also cost efficiencies by the management. And the net profit dragged, which was led by lower other income, which was down 32% quarter on quarter. And if you see the sequential decline is mainly due to preceding quarter. So if you see the other income in quarter 2 was very high as compared to quarter 3 that we are seeing, and this is the reason we are seeing this low other income. And in quarter 2 they had a higher MTM gains on treasury portfolio due to decline in bond yields during that quarter. If I were to talk about I'll just a few numbers. So there was a revenue uptick of 0.7% at 287 crore versus 285 crore. Margins were 30% versus 28% last quarter, and net profit was down 14%, rather 15%. This was on the back of lower other income.